Well, good afternoon and welcome to this FinXTech Exchange. I'm Al Dominic, the CEO, Bank Director in FinXTech, and I really just want to thank all of you for joining us this afternoon. At least this afternoon on the East Coast is 2 o'clock here. Obviously, that's 11 o'clock on the West Coast. It is Tuesday, April 6th, and we've wrapped up a really phenomenal year of college basketball. We saw Baylor beat Gonzaga last night, which is, of course, on the heels of Stanford's ladies beating Arizona by 1. We know spring is in the air, vaccines are getting distributed, and mobile commerce just is, continuing to accelerate, if not just take us in directions that we never thought. So this FinXTech Exchange, we think, is pretty timely, obviously pretty relevant if you're joining us. We want to thank the sponsors, Casisto, Mantle, Narmi, and Nimbus, for helping to put this on and make it all possible. You're going to see them on some of the peer exchanges that you join in a little bit. But before we get going, I just want to go through some very rapid-fire housekeeping details. All of you have joined this event in listen-only mode. So that basically means you're automatically muted. If you want to improve your viewing experience, we recommend that you click on the slide bar at the bottom of the screen to put the presenters into full screen mode. I also would encourage you to ask questions as they come to you. You can do this just by clicking the Q&A button on the right-hand side of your screen. That's going to come to me, and I'll do my best to facilitate your curiosity by asking it to the different panelists as best I can. There's no need to take any notes on this unless you're a compulsive note taker. This is a recording that's going to be shared with all attendees within 24 hours of this being completed. This will go out by email and it'll be available on our bankdirector.com website. Now, I don't anticipate any technical issues, but again, those are famous last words. So if you have any that come up, use the moderator chat feature on the right-hand side of your screen, and our team will do whatever we can, as best we can, to take care of it. So easy housekeeping. Now let's go to the fun part. Let me introduce our speakers today. As I do, I'm going to ask them to turn on their webcam so you'll have a face with the name. I'm going to start with David Carlson, an enterprise account executive at Mantle. Mantle is an incredibly high-performing fintech company that helps with account opening. Joining him is Stephen Epstein, who's the Chief Marketing Officer at Casisto, a company that provides conversational artificial intelligence for banks and for finance companies. Jeffrey Kendall is the Chairman and CEO at Nimbus, a fintech that delivers a really wonderful suite of banking technology along with operational resources to launch and run a new digital bank. And finally, Jay Vandergriff is the Director of Sales at Narmi, which is a New York City-based fintech that builds enterprise solutions to really help with digital banking. So, gentlemen, nice to see all of you. You know what time of year it is? Maybe the best time of year. We got the Masters coming up this weekend. We've got the sun outside. At least in DC where I am, the cherry blossoms are out, and it just seems like there's a sense of optimism that is taking grip of the whole country. So I thought we would use that sense of excitement to really get the conversation going today. We're going to talk about banking and kind of where things are heading, so that when we get into these peer exchange conversations, people will have at least a few different thoughts that they're going to want to surface with each of you. We're going to do this in kind of a rapid fire kind of setup. Again, to the audience who's watching remotely, if you have questions, do feel free to drop us a question. But I want to dive right in because we have 40 minutes. We're going to respect people's time. And we got some smart guys that are joining us today. So first question is going to go to Stephen. And I want to talk about this concept of personalization and really, help us understand how conversational AI can help to personalize the experience that's delivered through a mobile app today.
Sure, Al. Well, first, thanks for having me. Really excited about the session today. So let's break that apart into two components: conversational AI and personalization. So first and foremost, what is conversational AI? So for those of you who aren't familiar, conversational AI is the ability for essentially a computer to use artificial intelligence to understand with a high degree of accuracy what humans are asking it. So, the notion of what someone's intent is when they ask a conversation, what the context is around a question, like these are fundamental structures that computers need to understand, be able to truly appreciate what a person is asking, and then to figure out how to respond. So that's really what conversational AI is about. Personalization, well, we all know what personalization is, right? It's this great, fantastic promise that the financial services industry has to really build a connection between the bank and the customer, to assure that every digital experience, whether it be a mobile application or a website or a virtual assistant, has a personal connection, and the bank understands what the customer needs, wants, and is able to kind of personalize their experience back to the customer. There's a really interesting connection between conversational AI and personalization. You as a banking customer, when you interact with your bank, if the bank has delivered this promise of personalization and let's say they have a chatbot or they have some other conversational channel on their digital property that doesn't really understand what the customer is asking or doesn't understand what the customer is asking most of the time, but at the same time they're delivering a promise of personalization, you're kind of creating this false expectation unless the technology can live up to the promise of delivering a personalized experience. A really good example of that would be, often we see our customers, our banking customers, asking simple questions on these digital properties like, what's my last 5 transactions? Well, if this is a highly personalized conversation or interaction or digital experience, often it will go from what are my last 5 transactions to how much money did I spend last month? And, where did I spend my money? Did I spend it on utilities or on travel or on groceries? If you think about these type of personalized interactions, and if you think about a digital property like a mobile application, things get complicated. You're typing in a lot of questions. You're going from page to page. You're going from, different experience to different experience, whereas conversational AI allows the banking customer to have a personalized experience that's really organic. They can just ask the computer all these questions, and the computer can respond in a very personalized way with their exact information about spending patterns, spending analysis, their last 5 transactions, their next 3 payments. Conversational AI creates this moment where people really do trust the banking digital property and capabilities and really appreciate this promise of personalization.
So, Stephen, as you're talking, you're in a sense you're dancing around some of the big issues that are dominating boardroom conversations right now, which is how do I position my institution to be both competitive today and relevant in the future? And I think we're seeing over the last 12 months the adoption of mobile technologies, not just in the financial sector, but in all facets of your life, really becoming so ingrained and just table stakes. I want to build on what you just said, shift it over to Jay, and maybe you could give our perspective based on Narmi's work with banks about the pain points that consumers are having with mobile banking, and mobile apps at the moment.
Yeah, well, we're seeing a big increase in the use of mobile. I was just talking to a CEO or CIO of a bank, and he mentioned that. And he was asking me where he should put his investment. He's gaining about 10,000 visits to his branches. He has about 22 branches per month. About 60,000 calls into his customer service center, and about 1 million login sessions on his mobile and online banking. So obviously, there's been a big shift. We've seen about 45% of bank respondents say they have drastically, which is almost half of consumers out there, have drastically changed the way that they are interacting with their banks. So it's really important to kind of really bank the way they want to bank or be banked. And so you still have to have the branch network, but what we've seen is a big disruptive change because of COVID. And what I've really noticed is when COVID first hit, everybody's kind of like, the hospital workers waiting for all the patients to come in. But it was interest. But now, since we've gotten through a strategy planning, cycle, now all of a sudden there's huge interest. And so obviously the interest in digital mobile banking has kind of really is really higher up on the priority list than branch banking. But with that, you have to really offer a seamless mobile experience. So we really focus At NARMI, we really focus on that experience. There's a lot of details underneath. We can get into that in a little bit, but simple things like thumb scrolling, getting away from clicking, getting away from any kind of downtime at all are really important for the what we call the user experience.
Yeah. Well, as you're talking about this, it kind of brings me to some of the work that Nimbus is doing, and Jeffrey is the chairman and CEO, so I think he's probably best qualified to help us understand, where they're sensing not just interest but also demand, because you think about the digital natives that now we're surrounded by. This is a generations, plural, that are going to be really essential for banks to succeed. And we're seeing the development of some digital native banks, Buddy Bank, Live, Frank, others, that are offering cutting edge services that appeal to a younger crowd. And so, Jeffrey, I'm curious, how do banks, in your view, prepare for this up and coming generation? Because I've heard from some banks like they're not mature enough to be profitable, or that's not our desired customer base. But these are folks that are coming on fast and are early adopters, and they can be more loyal if you play your cards right.
Yeah, I think that's right, and it ties into beyond the technology of where mobile is today, and of course technology is important because it enables and empowers us to do things with mobile. But I think the right place to start the conversation is really with what is the strategy and what's the intent of what you're trying to do with your mobile or digital strategy. I've sort of talked before that I see where we are is really in the mobile or digital 3.0 version of sort of what the journey of digital banking has become. And if you look, back to between 2007 and 2011, that was really mobile 1.0. Banks and credit unions were just sort of, hey, we've got to get an app out there because everybody else has got one, and our customers are asking for some degree of self-service capability, which that was sort of the hot topic. And then, probably 5 or 6 years ago was mobile 2.0, where people said, okay, more than just having an app out there, we got to think about what the user experience is, what how easy is it to use, how well does it reflect our brand. And now where I think mobile 3.0 is in the right conversation to be having in the boardroom is beyond just the technology, beyond just the user experience, but what are we trying to do beyond self-service? How are we actually using digital now to grow and adopt either, that's new customers, new product acquisition. Those are the real power of where digital and mobile are now. And it's saying, how do I create a channel which can actually help us grow versus just focused on efficiency, adoption, and self-service. And so every company that's on this call right now is, I think, laser focused on that. What's the outcome? And it's great to talk about the technology. It's great to talk about the capabilities, but if I'm a bank CEO looking at investing millions of dollars into my mobile strategy and possibly taking a year or two to get it implemented, I want to know how this is going to really translate into bottom line or top line growth for the bank. And I think that's where we as a vendor community need to do a better job serving the customers, which is coming to them with an answer about the strategy versus just the technology. And so, but that's where I see a lot of companies evolving. And I think it's getting there quickly.
Yeah. I'm going to come back to you about like this idea of you were, 1.0, 2.0, 3.0, because I feel like I love to use baseball as the stalking horse for a conversation. And you had an interesting conversation with somebody that I'll come back to, but I don't want to get there just yet. I did want to ask David Carlson from Mantle. You've heard your three, compadres here talking about the approach. I'm interested from a community bank standpoint. How are you seeing them grow new deposit relationships and really using, your mobile device from a prospecting standpoint, not just with your existing customer base?
Yeah, and I think that's an awesome point to really think about today. And Jeffrey, you were just kind of pushing us right towards that thought pattern, which is, how do we now take this technology that everybody's got in their pocket and this concept of people coming to us digitally, and how do we actually make sure that we're converting this new business? And so we read a lot on this topic, because I'm sure everybody on this conversation does. And what we're seeing is in the challenger banks and in the larger institutions, they're converting 30, 40, 50% of their brand new banking relationships digitally. But the reality is, if you look at that data for community banks, it's many times less than 5%. And we all know that there's over half of community banks that don't even offer digital onboarding today. And so the thing that we think is smart to kind of challenge ourselves in thinking about is, are the prospects that you're working with day to day, the folks that would consider banking with you, are they that different from the folks that are choosing these challenger banks or these larger financial institutions that the spread of demand would be 45 percentage points? And we think the reality is that can't be right? People are people. And so I've spent 15 years in community bank boardrooms in a consulting role prior to Mantle. And what I realized is we're just not addressing the right things in order to get things moving in a digital direction. And so much of this comes to investment, right? Are we investing in the right types of technologies so that we can see 15%, 30% of our in-market traffic start to convert through the digital channel versus using where we are used to seeing them, with is in branch. And so we think it's really, really critical to be thinking about what investments strategically are we making so that we can take this traffic that's already there. And then the last thought, particularly around mobile, I just read a research study that showed that the second largest complaint in this particular study that customers were bringing to their financial institutions is how incredibly difficult it is to add additional relationships with inside of the existing mobile experience. Right, so you got an amazing app and it's working great, and then you take them into this amazingly clunky process with very, very poor converting strategies, and they're like, what the heck? Like why is there such a big disconnect there? And so we think it's really, really smart to be thinking about how, when we move from one experience to the next, how does that feel seamless to the user, and how can that help you onboard new relationships and existing relationships, adding deposits more effectively?
Yeah, and I think what the four of you have nicely, shared is this is a mindset. It's a shift forward, but it's not a shift in a different direction. I think Jeffrey said it best. We've been looking at this for years. I mean, you can go back to the 90s when like online bill payment and presentment was, really popular, and you saw companies being stood up to help you just deposit your check. And that was like, oh my gosh, like we're going to be able to do this. Now look at where technology has allowed us to be more specific to the interests of consumers, but also small and mid-sized, commercial customers that have an appetite to do things in a more transparent, recurring fashion. Jeffrey, I want to come back to you because you I think have nicely illustrated that this is not a technical issue as much as it is a business opportunity. When I think about how you create fuller, richer relationships, that has to start really at the top. So how are you and your team sensing this, kind of aha moment that leads people to realize just because it's on a phone doesn't mean you lose the relationship?
Yeah, I think part of it is we're really trying to encourage banks to think about is to understand their customers more deeply. So set technology aside. Those are all just enablers to the strategy. I'm going to keep repeating that. And it sounds weird as a software CEO to be like, hey, the technology is not important. It is important, but it's only there as a tool. Digital in itself, I still maintain after all these years that digital is not a strategy. Digital is not an end goal. It is just a means to an end to serve your customers and grow your business more effectively. But when I think about it, it's, when you start with your customer and really understand where their financial services needs emanate, that's the only time that you're going to be really, any of the four people that are on this call, whether it's, Narmi or Nimbus or Cisco or Mantle, we sort of can't help banks be successful unless they've thought about what the actual needs of their customers are. The customers who have that question sort of clearly defined or the answer defined in their mind actually makes it a lot easier to take advantage of this technology. And I think understanding where the financial needs of your customers and where they emanate from, that's sort of job number one. And just to make that clear, it's, I live in Boulder, Colorado. There's a Boulder Community Bank. Well, my needs as a banking customer don't emanate from the fact of where I live. It's more about my life situation, the life journey that I'm going through. I'm preparing to put another child through college. I'm thinking about the next life event. And those are the things that from a understanding your customer or personalization, should be right up the Casisto alley, which is if you understand where your customer is in the life journey, that's where you can actually give them very targeted services and products and going forth. And I think that's where the conversation has been missing from the technology community and the folks on this call for the past 10 years. And now I think that's where we're evolving.
Yeah. Well, you bring up, Stephen's company and, the personalization approach. You can almost hear IT departments at banks, like a larger one, being like, oh, we can't offer so much personalization because then you create a clunky experience, it's cost prohibitive. But I'm curious to take what Jeffrey just said and put it to you, Stephen. I'm thinking about lifestyle banking as he just mentioned. Just because he lives in Boulder doesn't mean that defines who he is. You think about what customers are asking for today, like how would you look at that? And then are the, I guess what I'd call them virtual assistants. Is that an answer, or is that an approach that bears fruit?
Yeah, listen, I think, Al, you mentioned Liv earlier in the conversation. Liv is one of our customers and created an amazing, what I call a challenger bank experience that is focused on a younger digitally native demographic. And, Jeffrey, I agree. At the end of the day, all this technology is a means to an end. But really understanding your customer and understanding the needs of the customer you're servicing and how to use technology to really change the way they perceive your brand and how they experience your products is just a super amazing opportunity. And I Liv as like a case study for that. They literally rethought the entire banking process. They don't have a live chat offering. Like they know their younger banking customers, millennials, they don't want to talk to someone in a call center and have that conversation. They use a virtual assistant to answer 99.8% of every single interaction coming in across their bank. That is their primary channel to market. And then in the odd case a virtual assistant can't answer, they have back-off capabilities to get an answer to the customer. So their operational model has changed dramatically. Like they don't have hundreds and hundreds of call agents or dozens, depending on the size of your bank. They have customers that are getting answers in seconds, not minutes or hours. Cross-sell opportunity. I mean, lifestyle banking is a great example of how you can merge different business models with a financial services business model to provide a much more engaging experience for your customer and actually build revenue through different channels. A good example of that, Liv, a great example. So of course they're a bank at the end of the day, but when you're taking Uber a lot, they'll look to see if there's an Uber discount you can use, or if there's a better transportation product available, and they'll make that available through their banking products and their channels. They have opportunities there from a revenue perspective, but also their customers are excited when they see they can make money or save money. Back to the virtual assistants, it's an opportunity for them to present a very complicated banking experience in a very simple way. And that's through a virtual assistant or through a digital assistant, depending on how you want to think about it. And at the end of the day, if you think about this, simplifying the experience to the customer, delivering more products that are more relevant to them, making them happier, it just creates this perpetual circle of value and trust, makes your business stronger, lowers your cost, creates great value for your customers. Liv is a great case study for that.
Yeah, no, so Stephen, I love being surrounded by optimists, people who are like you, looking at all this stuff and getting excited about it, because it's so much more fun to live in that type of world. But I had jotted some notes down in advance. Facebook had lost something like 500 million records. I mean, that was in the news just, I think, a day or two ago. It didn't get as much pickup as you would have expected. And I think it's because, these breaches and these, cyber, hacks are becoming so commonplace. But some of the research that our team has done shows that digital identity and fraud remain, real significant concerns when it comes to just opening a new account or creating a new relationship. Again, it doesn't just have to be with a bank. It could be, with a healthcare provider. It could be, making a change from one department store or a retailer to another. Jay, I'm like to direct this one towards you, because when I think about security and trust issues, I'm curious about the types of features that banks can try to implement that makes the security, a lot more front and center to, just take away some of this concern that people have.
Yeah, so we have a process. Let's say for a new account opening, we have a process that really doesn't ask for their document or for them to take a picture of their government ID and upload it as part of their new customer application. It also doesn't ask them to have to, send in or do a wet signature on on their application or their during their process. So what we have to do is get creative and use back end databases so that we can go through and find out where their IP address is. If their IP address is in Nigeria instead of Indianapolis, where your bank may be located, that's a red flag. If their browser is in a different place than what they say they're living, or if there's an email address that's been listed, we call it blacklisted. So what I think a bank has to do is really kind of cover all these bases with these different data sources and what we do is we come up with an aggregate score so that we can try to figure out if this new account needs to be red flagged or not. So there's, that's one aspect of knowing your customer as they're onboarding on. Current customers, security is front and center of all things we do. For some of those, is it the server, on-prem, more safer than, AWS, SaaS-based solutions on AWS. There's pros and cons to each, but really the online SaaS-based cloud native type of offering has really proven itself that it's very safe. But you have to do your due diligence. God knows we probably spend 80% of our time on anybody who wants to sign up with us on due diligence. And you have to really kind of go through and make sure they're SOC 2 compliant, any third-party vendors, and then, any solutions that the bank is considering bringing on. So, front and center, and then being able to really authenticate the way they want to be authenticated, whether that's being sent an alert or a notification, plugging in a code, multi-factor authentication. Those are all things that we're just trying to figure out if they are who they say they are.
Yeah. Well, let me borrow inspiration from the late Steve Jobs, who would always say you work from your customer backwards to create the experience. And so, as you're talking about how to look at security, identity, creating something from a bank standpoint, I want to flip it and ask David Carlson, if you're looking at the ways that people think about opening an account, there's clearly friction points that create abandonment issues. What are you seeing at the moment that banks should be aware of?
Yeah, and I think that dovetails great off of where we were just at, Jay, and kind of thinking about how do we use technology smarter in order to make this process better. I think the place to start is to realize this isn't new, right? This isn't a banking thing. Like every e-commerce company, every company that was brick and mortar and now has to figure out how to solve things digitally had to walk this same journey. And I think you need to ask yourself, if they would have applied all of the same logic that they were using in brick and mortar to a digital world, would they have had the type of outcomes that they were experiencing digitally? And we've seen lots of great companies stub their toe on this over the last 10 to 15 years, haven't we? And now we're seeing this enter our vertical, and it's coming really, really hard and really fast. And what we've seen is conversion rate, the opposite of abandonment rate, will make or break your digital channel. And the number one reason that community banks are seeing such high abandonment rates is because we're taking branch-based processes and we're applying them to a digital world. This is how we've always done it. We've done it this way for 50 years. These are direct quotes I heard last week from 2 other community banks. And so when you challenge them about thinking things like non-documentary verification of identity, as Jay was speaking to earlier, right? Smart ways to use digital to authenticate the person who is applying for an application, that's just not the way that we have done things traditionally. And so community banks that are listening in here, we really encourage you to bring some friction into the process. Understand that you're going to have to challenge a little bit of the status quo of this is the way we've always done things, but do it in a super smart way, right? As partners, we should be able to bring you great data to be able to help support the fact that we're not asking you to take more risk or do things that don't make sense. We're asking you to think about doing things differently because things have changed. Technology is better. There's ways to get better outcomes, and really thinking about how to use that data to change this branch-based approach and really change it over to a digital-first approach. And that's what's going to start to really fix the abandonment problem that we're seeing today.
Yeah. Well, we've got about 15 minutes left, so I'm going to just encourage anyone who's watching, if you have questions, feel free to send them in, and we'll either do it here, or if you want to just pocket them for the peer exchange, that's totally your prerogative. Guys, as you're talking, I'm thinking about a few conversations that I've had with some larger regional, even super regional bank CEOs that are really trying to get their arms around where the industry could be pressured to head. And so they've been evaluating their tech strategy. I think this lines up with what Jeffrey's been saying throughout. It's about the business. It's about what is it that we want and aspire to be seen as and be able to provide. So I'm going to bring it back to Jeff and ask, from a strategic roadmap, we're at this period in time where last year you could define a lot of activity as very reactive. Everyone's noticeably and rightfully proud of their SBA support for the triple P rollout. But now you've got an opportunity to be a little bit more disciplined, a little bit more calculating, and you're not able to offer every single thing. And here we're talking about mobile banking, but that has to fit into a larger framework of what you want your business to be. And some of you have talked about these challenger banks or neobanks or digital banks. It's a bank at the end of the day. It's trying to make loans, take deposits. I mean, there's things that are bread and butter to the industry. How is it that a bank's CEO and board can almost push a button and take a pause together and say, is the strategy we have the right one? Are we communicating it appropriately? And also, are we expressing it in a way that will let us see maybe some vulnerabilities that we hadn't expected before? I have to imagine that's where each of you brings some great qualifications, because you're living in this on a day-to-day basis. So that's a very long question. I apologize. Terrible job by me, but Jeffrey, maybe you can bail me out.
Yeah, no, I think, tying it back to that business strategy again, it is so critical. But I think the banks and credit unions, they have the opportunity to rethink sort of their position in the financial services space. And I think there's some interesting trends which are giving maybe some concern and maybe some inspiration to banks as well. So one of the big categories that I think is where people need to do some thinking is banking as a service or embedded financial services. This is probably every single day I have a meaningful conversation with a policy level decision maker in a bank about, should I be in embedded finance? Should I be in banking as a service? What do I need to do to actually make that survive? And I think it just goes back to, if you think about what is a bank? They make products and they need to distribute those products to the end customers. And so you could say, look, mobile is a service channel and mobile is a distribution channel to get new products into the hands of the customers. And I think if people start thinking about the framework of, instead of worrying about the specific channel or technology, but think about which product I'm trying to get into the hands of which consumer group, then the answers for which channels and which capabilities, features, and technology will be there, that will sort of answer itself if they really figure out the answer to that question. And so for me, mobile is another channel, although it is the most dominant channel from a digital perspective in terms of the day-to-day interactions where we're going. Don't sort of overthink it, right? Get back to the basics of, hey, if I'm trying to get a new invoice factoring feature out to my small business customers, that's the conversation you should be having. And then how does onboarding, how do these things support the types of capabilities? And I still think that's where the conversation has been missing until now.
Yeah. So Jay, we have to look at some successful competitors to understand what could potentially occur. We've gone 35 minutes and we haven't brought up Chime. 12. I think they had 12 million active users, according to a report I saw from Cornerstone. And I typically trust our friends, especially Ron Shevlin. If he puts something out, I'm going to hold him to it. So Ron, if you're watching this, you can tweet at me if I'm wrong. But what could you, if you're a bank, what do you learn from Chime and the behavior that they've exhibited to build the business that they have?
Well, and it's interesting. We posted on NARMI.com an article that, what financial institutions can learn from challenger banks in general. And Chime, has absolutely no physical location. So how does a bank operate like that? I mean, almost because of COVID, you got to start thinking, okay, what happens if all my branches go away for whatever reason? How can I, still bank my customers through digital? And one of those that I think Chime has done, and others like Radius Bank, which has no branches, which is one of our customers, is that you got to really be mobile only. There's still banks out there that have to sign up for online, and then they can get to their mobile. So if you do a completely mobile first type strategy, even to the point of when they go to download the bank's app, even though they're not a customer yet, but right away you start the onboarding process right from there. So, I think that's really good. We talked about it before, but a fully get to know your customer type, non-document based verification. You start introducing, manual processes into the online experience, and you're going to get drop-off rate, like a lot. And so that's what we've heard, and that's what we've experienced. And then, here's where you got to really continue to really leverage the experience they get at the branches, which is playing the role of a financial friend. But how do you do that online? And there's a lot of good opportunities now to do that online. You got to be able to offer them financial wellness. You got to be able to offer them content that they're interested in, and you have to get to that primary financial institution status with them by offering them products that they can go out and link external accounts. So when they want to look at their balance at any account, and the average account holder has about 5 different bank relationships, that they can really view what they're doing and be able to make payments, do transfers, whatever, from your mobile banking app. That's really what we see is really important. So it's got to be disruptive. You got to think, again, what happens if you don't have any branches? Not even though millennials want to sign up with a bank that has a branch close to them, do they ever really want to use it? And then you got to really kind of figure out what the return on that channel is. What's the return on channel like a bank branch versus a call center versus their online banking. So you can look at it that change is tough, but you can really look at it that change is a big opportunity, and that's what some of these challenger banks have done.
Yeah, and I'll walk into the cliche that change is a constant, so we might as well just embrace it. Now, David, you touched somebody's interest because I got this question for you. It basically great comment on don't take the bank-based processes and apply them digitally. I don't know who's asking this, but they're asking if you could provide an example.
Oh, yeah, I think there's lots of those to give. So we already touched on this idea of non-document based verification. I think the stats say something like 8 of the top 10 bank rate banks are using non-document based verification today. So they're not taking any type of an ID number or an ID scan in order to onboard a brand new deposit relationship. That's a completely different way of thinking about things for most community bankers, where we're so used to folks coming into branches where that ID has a ton of value because there's a picture on it and you can match it to my face. In the digital world, there's just so many smarter tools where we can triangulate so many of these different data points, which Jay was speaking to some of them earlier. And we can use really, really smart and deep data sources to validate identity without these different out-of-wallet questions, which is a terrible user experience online, and without having to take this physical ID. The other thing I'd say are things like funding is a great example. So we're so used to the way we fund things today, and we don't always think about best-in-class partnerships that can help funding be stronger. So using easy integrations like Plaid that you can bring to the table so that folks can easily do ACH without having to type in their routing and account number. My parents, who are much older bankers, they get an account number and a routing number, but a lot of this younger generation, they don't know what you're talking about. But they know their username and their password for their mobile banking, and allowing them to fund that way is going to get you a significantly better outcome. So there's a ton of them, but that at least kind of gives you a start on thinking through that.
Yeah, and maybe that's something that you pull into the peer exchange if people want to go a little bit deeper, because I think that's a great point. Stephen, I'm thinking about you being the CMO, and I'm sure you see a lot of statistics. Maybe you can help me out. Maybe you can't, but I'll at least try. There's a question about statistics relative to digital account openings versus acceptance during the last 12 months, so really during the COVID period that we're in. Are you seeing or noticing anything different relative to traditional account opening statistics that you would have expected to see? I mean, I have to imagine that there's a widening gap, but I don't know if you have anything anecdotal to share.
Yeah, I don't really have any data specifically on account opening that I can bring to the table in terms of pre and post COVID. I can tell you from in a digital engagement perspective, I think we talked about it earlier in the conversation, the amount of digital engagement that we're seeing across all different channels has gone up exponentially. The really interesting data point that we do have that your viewers may find interesting is we have a whole set of different intents and models that allow customers to ask a whole variety of questions and perform a whole variety of tasks, from understanding their account balances to moving money and so on and so forth. One of the intents that we have actually talks about the bank's digital capabilities. And pre-COVID, this intent was not used very much. People didn't ask much to the virtual assistant in terms of what does the bank have to offer around digital capabilities. When COVID hit, that intent went through the roof. How do I deposit a check? How do I do this on your digital properties? Where can I find a routing number? I mean, like really simple questions that traditionally just weren't asked very often. With COVID, people are asking very non-traditional questions on digital channels, including what are your digital capabilities? COVID has changed a tremendous amount in terms of digital adoption and digital awareness over the past 12 months. It's crazy.
Yeah. Well, again, it wasn't putting you on the spot. I just figured you've got such a great insight into the industry. I'd take the chance and run the risk.
All good.
I'm not going to run the risk of pulling a book out of my bookshelf because we're pretty much at time. But Jeffrey Kendall, I did want to just point this out because I thought this was really cool. If any of you have read Moneyball, you'd be familiar with Billy Beane, the general manager and really the architect of the Oakland A's. So Jeffrey and his team have sat down with Billy and done a series of interviews. I'm just going to suggest that if you're interested in baseball, if you're interested in business, kind of a creative mind and Billy Beane, I thought you guys did a really cool thing. I just want to say thanks because, again, it's always fun when you're stuck at home and you're looking for something different that can spark your creative juices to find this. So that'll be my PSA for the moment. But I want to thank the four of you. Thanks for sharing your perspectives. Again, to the viewers that are watching, you're going to receive a recorded version of this webinar within 24 hours. We are going to post this on the bankdirector.com website, so it should be pretty simple and easy to find. If for whatever reason you can't find it, just let one of our team know and we'll help you out. There are peer exchange sessions coming up. These are the exchanges that are exclusive to our bank audience. So the people who have been invited have previously indicated you want to be joining these. So we've broken you into small groups. We've sent unique links. Those links came from Nicole Smith, who's just super talented and awesome, member of our events team. You can click straight on that link. You can join your peer exchange group. That's going to start in about 60 seconds. I'm going to give everyone a chance just to pull up their emails if you don't already have it there. But again, Stephen, David, Jay, Jeffrey, thanks for doing this with us. We appreciate the ability to share some of this insight with the special exchange. I'm Al Dominic, and I look forward to seeing you again in the near future.
Thanks. Enjoyed it.
Thanks, Al.
Thanks, Al.